Hello traders, Gary Wagner here. It is 12:33 in Honolulu, 6:33 in New York on Thursday, 4th day of May, 2023, and this is the Daily Report for Gold and Silver. Traders, we are witnessing history in the making, with gold gaining 3 consecutive days, having a range from the open on Tuesday to the high today of almost $100. As of 12 noon here in Honolulu, 6 in New York, gold is $21.60 higher, a gain of over 1%, and fixed at $2,058.60. That is in conjunction with fractional gains in the dollar, up 0.08%, with the index fixed at 101.20. Lastly, silver is up 2.55%, with the most active July contract currently fixed at $26.33.5. Unquestionably, we have seen history in the making, as we have seen about a $100 price range over the last 3 days, with gold trading to a high today of $2,085, just a couple dollars shy of the all-time record high. On a technical basis, it is pretty easy to recognize the moment of the breakout, and that is the asymmetrical triangle we have been talking about over the last couple of days, with a descending top, in other words, a series of lower highs and a flat bottom. That is why it's asymmetrical, but still a triangle. You can also see, this is a 120-minute chart, the tremendous move that it made in a 2-hour period during that breakout. That is certainly when things changed in terms of where we believe gold could head to. The compression triangle is made up of multiple variations: ascending triangles, descending triangles, symmetrical, asymmetrical, but typically on a descending triangle, which is composed of a flat bottom or a series of equal lows, as well as a descending set of highs or lower highs, it is construed as a bearish pattern. It usually follows a defined downtrend, an oscillation between the upper resistance and lower support, and then the break is to the downside. In this case, we're seeing a variation of this that is a bullish variation and is quite rare. The problem as a market technician in forecasting where we think gold prices could go to is, after this particular high that came in the middle of last month at about $2,060, and the all-time record high at about $2,088, we have no historical history in which we could gauge where gold could trade to. So we do have to use some different tools, and the primary tool that we use is called a Fibonacci extension. However, to properly use a Fibonacci extension, we need to combine it with an Elliott wave count as well as a fib retracement. We use the fib retracement so that when we're gearing a particular wave, in this case a wave 3, we want to have an idea of where the correction came. And in the case of our 4th wave down, you can see that it was more than a 61.8% retracement and just less than a 78% retracement. So if we would use a typical model in which we would look for a 61.8% extension, the current price of gold would be much higher than the extension because of the depth of the retracement, which is why our current forecast for the conclusion of this 5th wave falls anywhere between 2120 and 2261. 2261 would be a 1-to-1 relationship between wave 3 and wave 5. In gold, we have seen extended fifth waves, and a 78% extension would take gold just above 2100. Obviously, these are the same numbers we were looking at when we did our 2023 forecast, and we believe that those are still realistic numbers. I'm rounding it to the center, about $2,200. That is where I believe this rally will conclude in gold. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.